All right, so I'm going to look at the dollar and gold in this video. Um, I've been warning recently that um, the dollar was due for some kind of bounce. It was late enough in the daily cycle that we should get a bounce out of a cycle low. The bounce, uh, if the market is allowed to trade naturally, the bounce should roll over fairly quickly, not go above this top, and then continue the intermediate decline. However, I've said this many times, the currency markets are the most manipulated markets on the planet, even more so than the metals market. So, in in a completely free market and a natural market, an intermediate cycle is never going to bottom on week 15, and that's what we have here. This is week 15. You're never going to get an intermediate bottom on week 15 naturally. But as I've said before, foreign central banks are going to try and weaken their currency against the dollar. They're going to try and prop the dollar up and push their currency down. It's one way to offset the effects of um, potential trade deal that may not be as advantageous to them as before. So they try to weaken their currency to offset the concessions that they might make with new trade deals with the U.S. So keep in mind that even though this is never going to bottom naturally right here, in an intermediate degree bottom, uh, it would be natural to have a daily cycle bottom, but this should roll over and then continue making lower lows. It should break below this low. If central banks can keep their currencies weak and prop the dollar up, this could turn into an intermediate bottom. And so, as I've been saying in my videos recently, you've got to be cautious with gold. So let me move over to the gold chart. Okay, so we had a major resistance level here at 1300. Probably gold wasn't going to get through that naturally on its first try anyway. But I've tried to warn people of this before. The banks, the gold cartel, they do things like this to trap emotional gold bugs at tops and unload their shares and ounces on them at the tops of markets. And what I'm talking about, and I'll show you something similar in the mining stocks, but we've got a triangle, kind of a pennant pattern that has formed here over the last couple of weeks in gold. In any other market, this would be a bullish continuation pattern. In the gold market, this is almost certainly a manufactured pattern by the banking cartel. The gold traders, gold bugs, they see this pattern. They expect price to behave similar as it would, in any other market. If we had a pennant pattern like this in the stock market, then you could almost bet the farm that's going to break higher. In gold, this is a manufactured pattern to get people bullish, get them buying. The cartel unloads their shares and their ounces to those buyers, and then instead of breaking upwards like would normally occur, the price breaks down. And I warned my subscribers on Thursday to be, I've been saying for weeks now, you need to get off leverage, but I told them Thursday that you've got to be very cautious. The cartel loves to attack gold on options expiration, and sure enough, early Friday morning we get the big contract dump, a big attack, and the pennant breaks to the downside. So here's our daily cycle trend line right here. In order to confirm a daily cycle low, gold should break this trend line. So I'm going to say there's it's not going to be unrealistic for gold to come back down and test this support zone here around 1240-ish, something like that, over the next week or two. as it moves down into this daily cycle low. And if foreign central banks can stop the intermediate decline in the dollar, then it's possible that gold could form, this could be an intermediate top in gold, and price would then be expected to eventually come down and break this intermediate trend line. This is not what should happen naturally. Naturally, we should just get a move down into a daily cycle low and then another leg higher as the dollar continues its intermediate decline. But without a doubt, foreign central banks are going to try and intervene in the currency markets. They're going to try and stop the dollar decline in the dollar, and they're going to try and weaken their currencies against the dollar. And if they're successful, then it's very possible that gold could be starting not just a minor daily cycle decline, but a deeper intermediate cycle decline. And so, I've watched as this unfolds. Let me widen this chart out a little bit. As we got this move down here, and I became more and more bullish. I get more and more comments and emails from the trolls telling me, I'm wrong and that gold is going below $1,000, and of course that's where we get the bottom. Now the exact same people, are just slave to their emotions and price action. At this bottom, when they should have been bullish, they were over the top bearish. And here at this top, now these same people that couldn't control their emotions down here and were bearish are suffering again. They again cannot control their emotions. Now those same people are over the top bullish after we've already had a 5-month rally. Now they want to be to the moon bullish. So this is just how most people operate. They're driven by their emotions. At bottoms, they're bearish when they should be buying, and at tops, they're bullish when they should be selling or taking profits. All right, so moving on to the mining stocks. Over the last several weeks, I've continued to warn people that the miners were flashing red flags. They were not following gold to higher highs. And I said several weeks ago, I said almost certainly what happens at these tops is that the banking cartel will manufacture a breakout that triggers the emotions of the gold bugs. They think that's the all clear to just go in hand over fist. They end up buying at the very top as the cartel is selling their shares to them, and that is exactly what happened. And again, you've got a 3.5 month rally, almost 4-month rally here, and we've during this time here, gold was making higher highs. The miners were not. That was a warning sign. I warned you that the banks were going to manufacture a breakout, and that the breakout would be a false breakout to catch people on the buying, and so the banks could sell their shares to them. And you can see that that's exactly what happened here early in January. We get this breakout above this high here, and then that is the exact top. That's where the banks sold you their shares in the mining stocks, and then the miners started moving down into a daily cycle low ahead of gold, warning that gold was not going to be able to push through 1,300. You need to be very careful here. You need to do the opposite of what your emotions tell you. We've had a very long, very extended run up here. We're possibly due for an intermediate decline, and if that occurs, then the cartel can easily smash the mining stocks, back down to maybe possibly even test the September lows. So while I think it's becoming more and more unlikely the stock market is going to retest the December lows. There's a very real possibility that the mining stocks could retest their September lows. Um, Again, I'll say in a natural market, in a free market, that would not occur because the dollar would roll over here soon and continue down into a deeper intermediate decline. And so the move down in the mining stocks would just be a daily cycle decline that would be followed by a higher high. But we just don't live in a world that has free markets anymore, and we haven't since the fall of 2008. And then finally, to wrap this up, this is the weekly chart of the mining stocks. You can see we've completed a weekly swing high, and it won't take much more of a decline next week. And as I pointed out, gold needs to drop below that trend line before the daily cycle low is complete. So there's a very real possibility the mining stocks are going to close below this 10-week moving average. And 18 weeks into an intermediate cycle, a close below the 10-week moving average is often a pretty dependable sign that the market has started moving down into a larger degree intermediate cycle low. So you want to at least be unleveraged right now, and it wouldn't be a bad idea at all, I think, to take profits if you manage to rack up any on this rally at this point, because I think there's too much risk that central banks are going to stop the decline in the dollar, and that in turn would pressure the metals down. And if you add in the fact that the stock market is almost certainly starting the next phase of its long-term bull market, and buying pressure will move back into stocks, that's just the recipe for an intermediate decline that could progress in the metal sector, and especially the mining stocks in the next several weeks.